This is our Forex blog for November 11th, 2011. And like we say every day, you want to buy the strongest currencies versus the weak. You want to sell the weakest currencies versus the strong, depending on which one's on top. You know, the euro's on top of all the other pairs. The yen's always on the bottom. So if you have a strong yen like this, you want to find a weak currency to sell against the strong yen. Today, the Australian was weak. At least until 3:30, and the yen was strong during that time. So again, just like yesterday, you want to look to sell the Australian yen. And as you can see, looking at midnight right here, one of our Fibonacci areas acted as resistance area pretty much all day, all last night and starting the day off. And so when it broke underneath the hourly moving average, you can see it pretty much fell from 78.80 all the way down to about 20. It fell 60 pips. And if you use our intelligent trailing stop, it pretty much kept you in all the way until here at 37. So you're either short here at 75 or so, or if you waited for confirmation to break the swing low at 67, 65, you made 30 to 45 pips. And most times when currencies are weak and they retrace back up to the hourly moving average, it typically stalls there and then continues its trend. You never know if it's going to continue down or not, but you always want to draw fibs on that last wave and get a feel. If it only pulls back 50 or 62% and then goes sideways, guess what? It's a very likely reversal pattern. This is just one of the many good trades today. If you see a currency that has incredible strength and then it either goes sideways or it has a small pullback like this, that momentum move is likely to continue. Now, with the euro, the daily trend's up, the weekly trend is down, however, and the monthly trend is down. So, in that instance, you can still trade the euro to the upside, but I'll always anticipate smaller potential profits when the currency is showing momentum that is against the longer time frame trend. Coming up to 3, you can see there wasn't that much weakness. You never know if the trend will resume or when, but you could be looking for buys in the euro. And you want to find a currency that's weak to sell it against, to buy it against the weak one. Obviously, the yen is quite strong, the dollar's strong, but the Australian is weak. And, it actually became strong after 3. And another one that was weak before 3 was the CAD, as well as the New Zealand. So some of the trades you could have anticipated coming up to 3 was buying the euro against the Australian, because you never know what the future's going to hold. We'll take a look at that one. It might have given you a small loss or break even, or there actually may not have even been an entry signal, because we wait for price to actually break out and start to move the direction we hope before we go long or short. So we'll start with the one that's most likely probably not to be a win. You can see the euro Australian was going up. Coming up to 3, we're looking either to buy a breakout or preferably buy a pullback. I usually wait for at least 30 minutes to an hour of sideways action. So you can see that this one was sideways from 2:30, and at 3 it did technically break out here. So like I said, this one did provide a loss. You would have lost about 10 or 12 pips. Now, the New Zealand also was weak, coming up to 3 o'clock. This one really doesn't go sideways. It's a lot more choppy here. You usually want to wait for a 15 to 25 pip pullback. This one really, didn't break out of this level right here, so you wouldn't have even been into that trade. It did actually pull back about 30 pips and kind of go sideways. So you can count this entry right here as a decent place to go long, and it went up about 25 pips. And we're just going over in the blog how to anticipate future trend direction. The CAD also had a lot of incredible weakness, followed by very little amount of strength. You never know if that weakness will resume or not. You can see in the Australian it didn't, and you would have had a loss. Here in the Euro CAD, coming up to 3, you actually have wins. Because the strong euro did reassert itself, you have a pullback trade right here, which is, I've always said in class, is my preferred entry method. and you can see it went up about 10-15 pips here. You might have gotten out on that sideways chop and then bought this breakout again here. This is exactly like the Euro Australian trade, which would have had a 10 pip loss, but this sideways breakout worked. And you always want to draw your fibs on this to get an idea of where your profit target is. I usually exit half of my trade at the Fibonacci profit target. If it continues past that and kind of runs out of steam somewhere between the first and second fib target, I usually get out of half. And then when it comes down and hits my trailing stop, which probably would have been somewhere around 45. So I would have got out of half probably around 53. The other half, let's just say 45. My average exit would have been, let's just say 50. You bought this breakout right here at 25, you made 25 pips. So the point is, you're going to have losing trades as a trader. If you think there's any system out there that, every single day is 80 to 100% winning, you're an absolute idiot and you're going to lose your money. We're going to be the people who, and other professional traders are going to be the ones that take your money. Because stupid people that do dumb things are where, smart people who trade with discipline, patience, understanding of the markets, they're the ones who, make money. And traders that are impetuous, don't wait, have no sense of patience or timing, which is really more to do with about having patience. The rules are simple, they're easy to follow, they're easy to understand. Either you find a strong currency and you wait for a pullback, or you find a strong currency that goes sideways for 30 minutes. Sometimes I'll break the rule for 20, 25 minutes. But the longer it goes sideways without pulling back, without making a lower low than the previous swing low, the more likely it is to go up. So let's look at some other examples today. These are the kind of patterns that you're looking for. If you have the dollar has a weekly and monthly trend that's up. Now this intense weakness right here, followed by a little bit of strength, you certainly could look to sell it at that point, coming up to 410 here, right? But because the weekly and monthly trend is up, you anticipate that the weakness, if it does come back, won't give you more than a small 5 to 25 pip win. And you can see this strength, which is very mild, only lasted 10 minutes, and then some strength came back in. Now you wouldn't necessarily get on board this upwards move, but coming up to 530 right here, where it has half or 1/3, maybe 35, 40% of weakness compared to the previous upwards momentum, because the previous upwards momentum is in the direction of the weekly monthly trend, we're anticipating that continuing. So at 530 right here, it does continue, But let's look at one that could be a potential loss. We have a lot of weakness right here, followed by a little bit of strength, and then you can see it flipped barely red right here at 415. Coming up to 415, 430, which one was strongest? And you really don't want one that's been strong for 3 hours because it may have run its course. Find one that was maybe strong an hour ago or even a half an hour ago, and for the last half hour it was actually showing the opposite trend that this is. In other words, it's previously strong, and then it was showing a little bit of weakness, so that strength is likely to come back. Because sometimes you don't have patterns like that. You kind of have one right here in the Australian. However, the previous move for 3 hours was extreme weakness, and the weekly trend's down. I would prefer not to, have that. So there really doesn't appear to be any perfect example of that. We'll try an imperfect one. You really don't want to buy a pullback. Your best trades are when a strong currency like this has a little bit of a pullback with very mild weakness like this, and another currency that was weak during this time is having a brief amount of strength, but again, less strength, momentum-wise than the previous weakness. And so sometimes you don't find perfect trades. So let's focus more on, ones that are perfect. Very strong all day, followed by a little bit of weakness right here. That strength is likely to resume right here around 530. This one had some strength, followed by less weakness right here. Because it was, incredibly weak, you certainly could be looking to sell the Australian yen around 530 here. Oops, let me zoom in on this. Here's 530. You can see a counter trend move up right here. The previous wave down had more weakness than the previous up move, and the counter trend move up here had a third less strength than the previous weakness. So this is the kind of pattern you're looking for. Again, every trade's different. Some of them give you break evens or small losses. Some of them give you your full initial stop, which is 8 to 12 pips. Other ones give you 3 to 5 pip wins. This one came down, and notice the weakness wasn't as weak as it was before. And again, it's going sideways, which is actually it's not always bad when you're in a trade, but it's usually bad. It's usually, if the market starts to go your way and then goes sideways, it's never good. I mean, it's rarely good. Sometimes it has major support here, and traders are selling it. The people who are buying here give up. Once those buying orders disappear, the market breaks the support and it falls, considerable number of pips. So when it goes sideways like that, you should probably exit half when it does and move your other half to break even or so. But you would have been in this trade somewhere around 55. It barely went 12 pips your way, so you might have made 6 pips on the first half, maybe lost 2 or 3 or broke even on the second one. And again, notice that upwards move right here had more momentum than the previous upwards move, and it had more momentum than the last time down. And the fact that we have a major support area here, 50-day moving average, it broke underneath there, then it acted as major support. So if it can't get underneath support, it shows you that there's people buying here and it's likely to reverse. Speaking about our sideways consolidation entry method, here you have a very strong trend up with most of these bars above the 80. And it goes sideways here for the minimum 30 minutes that we specify. And guess what? When it breaks out, this is a trade that works. And this is your first profit target. And if if it goes sideways right at or near a fib target, get out of half there and use the trailing stop to get out of the second half. Our trailing stop's still in this trade, and it's up here around 79.35. So you're up 35 pips on half. You might have made 18 pips on the first half. You've already locked in, your average exit if it comes down and stops you out is up here at 24. You make 24 pips on this, and if it breaks through this Fibonacci area right here and monthly pivot level, it could go another 20, 30 pips, giving you a potential 40 pip net profit. The statistical strength is strong, and whenever you're in a trade and it shows you strength like this, let the trailing stop get you out. Sometimes it goes sideways right here, and it has major resistance. Once the sellers are gone here, it breaks through there. But be aware, if it does go sideways there for a while, can't break above it. As soon as it comes down, you want to get out because likely everyone's going to run for the door at the same time.